Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic, guys, we are going to dig deep between the ears, okay? A lot of you out there are proficient with technical charts and you're very good at recognizing patterns, but where you're not very good is managing your trades, money management, trade management, over trading, under trading, being scared to take a trade, being overconfident taking trades, risking too much money. Basically, a lot of psychological demons to overcome. And sadly for those folks, trading is largely psychological. In fact, trading is probably a 99% psychology and 1% technical chart. So you'll see in the lecture, I allude to kind of an analogy about blackjack. The edge in blackjack is very, very minuscule. Right? So the edge doesn't happen over 5 hands of blackjack or 10 hands of blackjack. The edge happens over 5,000 hands, 10,000 hands. Well, trading is very similar. The problem is, if you don't have good psychology, if you're not consistent with your approach, if you don't have mindfulness, objectivity, okay? If you don't have those things, you don't have an edge in trading, and that's the reason many of you are not making money. Because yes, the charts provide you with a small edge, but you're ruining it with your terrible trade management, your terrible money management, over trading, under trading, etc., and so forth, which are all psychological demons because you're not understanding yourself well enough. You're not understanding who is actually trading, right? So for example, you might stand in line at Starbucks and be totally fine and all. And the second you get into a trade though, you're like, oh my gosh, 5 more cents, 10 more cents. What can I do? Do you sit there and bite your fingernails in line at Starbucks? Probably not. So why do you do it in trading? Exactly. Because you don't fully understand who is really trading. So today's lecture, we're going to talk about that. I think it's a very powerful lecture, one you don't want to miss. If you like these videos, guys, please click that like button, hammer that subscribe button, right? We're trying to grow the channel. Help me out here. So without further ado, I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is the psychology of winning. Psychology is a very, very important aspect of trading, right? Money management is always number one, but the question is, how do you control your money if you can't control your psyche, right? If you can't understand yourself, how are you going to project positive trading or make money in this business? It's very, very difficult. So it's one of those things, you've probably heard this comment before, but you'll hear people say, proficient chart readers are a dime a dozen, but truly profitable traders are few and far between. And the reason for that is psychology. Okay. So today we're going to talk a little bit about that, kind of dig a little bit deeper into your mind. There are a few chart slides, but there's also a lot of text slides because we're going to be talking about what goes on between those 2 ears. And it's not pretty most of the time. And I think it's the hardest thing to overcome as a trader. I would much rather, given a choice, I would much rather work with a trader who is terrible with charts, but has a very disciplined mental approach than someone who's awesome with charts and has horrible psychology. Okay, I personally would rather help that person because it's a lot easier to teach somebody charts than it is to get them to change a core belief. All right, so before we get into that though, we have to talk about when will the insanity stop? Well, it'll never stop, but each week we find somebody new to pick on. And this week is courtesy of a 22-year-old that is doing some foolish things in the market. So let's have a look at that. Okay. So this is a Wall Street Bets one. I mean, they're easy pickings over there. I'm not gonna lie. It's pretty easy pickings. But I don't want to read this whole thing. You guys can read it if you really want. But you can read the bottom. It says 22-year-old lost $300,000 of his parents' money. Ouch. My first question when I read that was, why would they give him that much money to lose? I mean, maybe they have it to lose. I'm not really sure. But 22-year-old? I mean, I don't know. They must be very loving, trusting parents. That's the first way I look at it. Yes. So last hurrah before turning to professional help. That's never good. I mean, it's good to get help. I'm just saying it's never good when you need that kind of help. It means it's bad. Can I even say retarded nowadays? Am I going to get kicked off the internet now because of this? 22-year-old that is screwed up big time. My first mess up was discovering options in April of 2020, because we found out recently with Joe Rogan that you can't actually quote somebody and say the word, so I won't use the F word there. I'll just say mess up. So my first mess up was discovering options in April of 2020 when stonks only went up. Well, no, there's nothing wrong with options. Options is a wonderful vehicle to trade with. It's just, you're the problem. Okay, there's nothing wrong with options. Okay, it didn't matter what you found in April of 2020, whether it was Forex, whether it was stocks, whether it was options, you were going to find a way to F it up. Okay, that is clear here. Okay, I put in hours to become acquainted with market terminology and studied options, strategies, and stock strategies. Wow, you put in hours. That sounds really, a lot of time. Of course, in the beginning, it was a fun roller coaster. Ultimately, I ended up doubling my 5K account before I popped the question to my parents, can I trade your money? Ouch. Little did I know this would ruin my health and my wealth. I think that's enough of the reading part there. You guys can read the rest. I mean, my goodness gracious. I don't know what to say to this. It's just sad, on the parental part as well as this person's part. Again, maybe it's a small amount of money for the parents and that's why they did this. But considering this person said it would ruin my health and wealth. So clearly they're a bit stressed over it, looking for professional help. But they've done some crazy stuff. SPAC investing. This person was up 150 grand. They were up 200 grand. And they lost 300,000 of their parents' money. Now they have a tax burden, and there's a whole long convoluted story here. There's even more to this that I didn't put on here. But the point is be smart with your money. I mean, we've seen so many different ways people have lost money on these When Will the Insanity Stop segments, right? We saw one kid lose $50 million. And one of the things we often see is initial early winning turns into massive losses. And the reason I'm commenting is you guys in the room, you'll hear me say from time to time, the worst thing that can happen to you when you're new is winning. It's the worst thing that can happen to you when you're a new trader is winning. Okay? Why? Because you think you're better than you actually are, right? And when that happens, you tend to build your confidence level to a point in which it shouldn't be, an area it shouldn't be, and then you risk more than you should because you have this unfounded confidence, this unfounded level of what you think is experience. So there goes Facebook finally. Come on, jump, baby. So anyway, point, not going to drag this on anymore. Learn from this person. Like really, really learn from this person. This is unacceptable. So 22 years old losing $300,000 of their parents' money, and they really have no business trading that kind of money, really. So money management's your number one job. That's what you should take from this. Money management's your number one job. All right, let's dig in. So over the past several lectures, we've talked about technicals, deep technicals, right? Topping tails, bottoming tails, pivots, location, and the size of the tail matters, right? This is nice. It sells courses and it gets video views, right? It's true. It does. This is what people want to say. Oh my gosh, that was the best lecture I've ever heard. Why? Because you learned something about a red or green candlestick that if you don't have the psychological discipline to apply doesn't mean jack shit. Is that why? Because it looks cool and it looks like you see, and this is the problem with humans. When you see charts, when you see graphs like this or candlesticks, there's this perception that you're learning more because you're looking at actual candlesticks and you think, well, that's the vehicle to make money, therefore I need to be learning charts all the time. But the truth of the matter is the psychology is so much more valuable than the actual chart. Let's be honest, guys. I mean, I don't want to, dog the industry, but Technical charts give us an edge. There's no question. But how big's the edge? It's not that big, right? It's not. You might get a 10% edge, right? When you think about it, look at Vegas, for example. And I hesitate to compare trading with gambling because now you're going to say, see, people say he said it's gambling. But think of it this way. What's the house edge in blackjack, guys? Does anybody know what the house edge in blackjack is? I actually did a video on this like a year or two ago. It's small, okay? I'll leave it at that. It's like 1.7% or something like that. It's small, okay? 2-ish%, somewhere around there, okay? Think about that, though. There's no better business on the planet than owning a casino. And look how small the edge. Now, granted, I did pick one game, right? There's a lot of games at casinos, but you understand what I'm saying. The edge in blackjack is small, but it's still an edge. And that edge doesn't play out over 5 hands or 10 hands. It plays out over 50,000 hands, 5 million hands, right? Over the course of a year, how many hands of blackjack will have been played at this casino? In the long run, the odds work in their favor. So my point is, yes, we do have a statistical edge with technicals, but the edge isn't that big. So think about it for a second. The edge isn't that big. What matters most? Consistency. Well, how do we gain consistency? Psychology. How do we learn psychology? Well, that's the $64,000 question and why you're here today. So again, these charts, these are nice. These are great. Oh, candlesticks. Oh my gosh, Jared, that was the best technical lecture you've ever done. Somebody told me that a couple weeks ago. Location, level, and depth of penetration matters a lot. I mean, look at these bars, the topping tail, powerful, less potent. Oh my goodness gracious. Let's go make some money. Let's YOLO it. None of this matters. It matters like 0% if you can't get what's between your ears right? If you don't have the psychology to put that together. And that starts with understanding who's actually trading. Okay? Because if you don't understand who is actually pushing the button, it's not going to matter what type of pattern you take. Think of it like this. It's a rhetorical question because I know what the answer is. Have you ever taken like a tremendously amazing trade? Great pattern. Shit, I mean, just straight up. And you didn't make much money out of it? Has that ever happened to you where you did everything right but manage it right? You were patient. You waited for the pattern. You showed good discipline. You got the right entry. You got the right stop loss. I mean, everything's just check, 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 check. Got in it. For whatever reason, because there's a million of them, market went red. You got a little jittery. You lost on a trade before that trade. And boom, you got out before your target area. So you took the greatest thing you've ever seen and you effed it up. How's that? Well, that has nothing to do with the chart. It has nothing to do with the chart. It has everything to do with you and your perception of reality. So this is the one thing you need to understand. Perception and reality are actually different, but they can become the same thing. What's that quote? If you tell a lie long enough, it becomes the truth, right? So you need to understand, and we call this mindfulness, who's actually trading and what is that person doing? Because it's you, but it's not really you. You ever notice that the person who's waiting in line at McDonald's or at Starbucks is not the same person that's sitting in front of your computer trading? Like, do you bite your nails in line at Starbucks? Like, oh my gosh, it's going to take me like another 2 minutes to get my latte. I'm going to go postal if I have to wait two more minutes to get my latte. Tell me you don't do some of that while you're actually in a trade. Has that ever happened to you where you're in a trade where maybe you're not biting your fingernails off, but you're pacing? You're sitting there going, all right, find something not to focus on. Something else to focus on because I can't stare at this chart anymore because I can't take it. I need 3 more cents out of this thing. I just did it 20 minutes ago. Did I not? I did. Literally, I'm sitting there, come on, SQ. I need 3 more cents. I need 3 more cents. And I just sat there and stared at it. Just give me 3 more cents. Just 3 more cents. Now, do you sit in line at Starbucks and go, come on, just 2 more people. All right, just 1 more person. Okay, I'm next. No, it's ridiculous. So why do you do it with trading? Why do you do it with trading? That's what we're going to talk about today. Why you do what you do. So why do traders fail? Okay, well, number one is usually poor money management, right? They risk too much too soon because let's be honest. If you don't risk very much money, $5 per trade, it really doesn't matter how bad that trade gets. Seriously, it doesn't. I mean, if you lost 100R, it's $500. It's not the end of the world, right? You're probably not going to go live in a tent over $500. And that's if you lost 100 times more than you thought you were going to lose. So money is always the number one problem that gets you in the most trouble, right? Not taking a stop loss, risking too much too soon, right? So poor money management rules. You exceed your max daily loss limits. You cannot accept a loss. The market doesn't care about you, your family, or the fact that there won't be Christmas this year because you lost money by not adhering to your rules. This is a very powerful statement that I want you guys to read over and over and over and over and over again. If you think you're special, you're not. You're not. And I say it all the time. And you should love that about the market. Because the market, if it doesn't care about you, it means it doesn't know you, and it means it cannot either treat you better or worse. It's going to treat you the same as everybody else. Right? Isn't that the whole big thing in society today? Oh, you have privilege. The market doesn't give a flying F who you are, where you're from, what you look like, who you pray to, what school you went to. It doesn't care. So the market doesn't care. Your family, market doesn't care about that either. Your kids, market doesn't care about that. Good person, give to charity, market doesn't care. Bad person, steal. Well, in California, it's not stealing. But anyway, bad person doesn't care about that either. It doesn't know you, so how could it care about you? And that's something you really need to process inside. Like, I know there's people out there that just think, well, I've lost 5 in a row. The market has to throw me a bone soon. No, it doesn't. It doesn't have to do anything for you. Nothing. So get that out of your head immediately, okay? So people fail because they don't adhere to a strict system that keeps your trading account from dwindling. This goes back to money management. So many of you out there listening right now, you have dog shit money management. It's horrible. It's embarrassing. In fact, people shouldn't even allow you to have money. It's kind of like when you tell people, oh, this is why we can't have nice things, because you ruin them. Most people shouldn't be allowed to have money because you don't know what to do with it. I'm kidding about that. Everyone should be allowed to have money. But you understand the concept, the point of what I'm saying. You're so irresponsible with it, there should almost be like a test for you to be able to have money. Okay? So money becomes your number one thing. It's either your number one asset or your number one liability. Think about it. If you have good money management, it's an asset. If you have terrible money management, your money becomes a liability to your health. Really, it does. Okay? Poor trade management rules. You sell too soon before your target objective. We just talked about this. Took the greatest trade ever, great pattern, great entry, great stop, stock's moving your direction, you get out too soon. Well, what are you doing, guys? When you use poor money management, when you use poor trade management, tell me what you're actually doing. Anybody know? Audience participation. What are you actually doing when you use poor money management and poor trade management rules? Does anybody know what you're doing? I'll give you a hint. Think blackjack. You're right on the right path. You're gambling, but more than that. Go a little deeper, one step deeper. You are eliminating your 4-letter word. You're eliminating your edge. Look, if you go play blackjack randomly, completely randomly, as a player, what are you doing? You're destroying your edge. But if you always, stay on 17 or 16, whatever you choose, right? And you always double down or split, whatever, blah, 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 blah. That's a system. And there's an edge to that system. If you just randomly play, one time you do it, the next time you don't, you've destroyed your edge. So by having poor money management, by not following your trade management rules, okay, you are eliminating this small edge that you have. We already talked about it. The edge in technical charts is not that big. So by doing these things, you're destroying and eliminating that. And it's not big enough for you to be able to overcome this. Okay? It's a very important point. Don't let your money become a liability. All right? Lack of objectivity. You're emotionally irrational. You ignore basic common sense. You're in denial about yourself. Let me give you an example. God, I broke my plan 7 times this week. I'm going to go for a jog on Saturday, take a yoga class, maybe have a beer with my friends, give it some thought on Sunday, and by Monday morning, I'm cured. You trade well on Monday. Oh, you're like, see that? All I needed was a little break. I just needed that yoga class, and that little hike did me some good. Tuesday, you're back to breaking your plan again. And then what happens? Next weekend, you have the same conversation with yourself, but you're like, instead of hiking this weekend, I'm going to go watch a football game. That's what's going to do it this time. Guys, you're putting lipstick on a pig. You're not addressing the core issue. You're deflecting. You're saying it can't possibly be me. It's just I was a little too stressed this week. Or I got in an argument with my spouse this week. I didn't feel well this week. And then you look back and you're like, but damn it, I've been doing this for 6 months. It wasn't just this week. There's a pattern here. So you're in denial about your shortcomings. You're in denial about how frequently you do these things. So when you're in denial, what happens? You cannot make change because you don't think there's a problem. Or you think there's a problem, but it's not you. You're just unlucky. The market got you, HFT's got you, right? Well, it's you, because this isn't a one-time or one-week issue. This is a monthly, yearly issue that you've likely been dealing with for a very long time. So if you're not going to be honest with yourself, how can you build on your weakness, right? How can you grow? How can you expand as a person, as a trader, if you're not willing to accept your shortcomings? It's going to be very difficult and challenging. Another point of reference, you lack persistence, laziness. You just don't work hard enough. Another reason traders fail. Look, it's like this, and I use this analogy a lot. I got to think of a better one. You go to the driving range. Everyone's hitting the big dog. They're all hitting their drivers. Why aren't they practicing their pitching wedge or their long irons or every other club in the bag? Why aren't they in the sand trap? I mean, one of the biggest areas where professionals just kill amateurs is getting up and down, right? You miss the green, but they still make par. When you miss the green, how often do you make par? Not very. Well, you don't put enough time into that aspect of your game. So in trading, you're not putting enough time into that aspect of your trading. You're not putting enough time into the psychology. Heck, most of you aren't putting enough time into any aspect of your trading. I just got an email this morning. Someone who's been trading for 18 months, 2 months ago, just said, the beginning of the year, so a month and a half, right? Just said, I just started tracking my trades and I cannot believe the information that I have now, Jared. I can't believe all the things I didn't know about my trading. And I'm like, how did you not know that? To me, it's just a common sense thing. Track your trading, right? But again, that's laziness. Don't work hard enough. Somewhere in that realm, that's where that person falls, okay? And this one, expectations grossly exceed your experience level. You're demanding too much of yourself too soon. You're not a robot. Tiger Woods didn't become Tiger Woods in a week or a month. It took many years and decades of practice. So you're coming in, and let's tie this in. You're going back to this. The market doesn't care about you. Somehow, you believe that the market in the universe, you've just read The Secret. You put your vision board together, and all of a sudden, you're like, wow, the market knows that I lost my job and my severance package is about to run out March 1st. Oh, it's February 9th. It's March 1st. So by March 1st, I'm going to get this. What, because the market knows. The gods know. The secret knows. The market doesn't know. The market doesn't care. So stop thinking like that. Don't think because you've been doing this 1 year, you're supposed to be good. Don't think because you've been doing this 3 years, you're supposed to be good. No, that goes back to persistence, laziness, not working hard enough. Everyone takes their own time. Everyone's timeline is different. Some people it's 9 months, some people it's 9 years. But most of the time, from 99% of the people I meet, their timeline is too short. They somehow think they're going to come into one of the world's most challenging businesses and just click and get it. So you don't have the right focus. You're thinking about money instead of proper trading. Your timeline is too short. You can't accept a stop loss. You have terrible money management rules. You can't manage a trade worth, to save your life, and you're wondering why you're not making money. You probably at some point in time have checked every one of these boxes, and you wonder why you're not making money. Give it some thought. So, the first step to making money is to know thyself. First step. So we call it mindfulness. The capacity to be aware of your thoughts, beliefs, and biases in real time. In real time. That last piece is most important, right? Your thoughts and state of mind follow your emotion. Emotion doesn't follow thought. Emotion's a reaction. You ever been in a trade? You forgot to set your bracket order, and a huge wide range green bar comes in and it's past your target. Like you damn near spill everything in your, oh my gosh, holy shit, it's at target. Click, 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 mark it. Instead of going, wow, that's really nice. Maybe I should just bar by bar this thing out. Tell me I'm wrong. Tell me it's never happened to you. You forgot to put in your bracket and all of a sudden you're just looking at it and you double take. You're like, whoa, look at that bar. And then you fumble your keyboard to get over to that stock and you, I got to get out. It's past my target. Wow, you're pretty emotional over a stock that's past your target. What's the emotion? What's the emotion? Anyone? What's the emotion? Matthew Lindsay. Boom, first person. It's fear. The emotion you're feeling is fear. It's the fear that wide range green bar might go back below your target and back down, and you're not going to get out in time. That's the fear. I better get out right this very second. It might come against me in the next 12 seconds. It might come against me. So your fear of loss is stronger than your hope for gain. And you will never be a successful trader until your hope for gain becomes stronger than your fear of loss. Never. This doesn't mean to blindly take trades or to just YOLO it. It just means the need to be right gets pushed aside. The hope for gain is a more powerful emotion to you than that fear of loss, because you know every trade you take has the possibility of stopping. That's why we use stop losses. Like every time you get into a trade, that money, it's gone. That $100, $1,000, $10,000, it's gone. The second you hit buy, you accepted the loss. Let me repeat. The second that you hit buy, you accepted the loss. For the people who didn't accept the loss, you're the jitterbugs. You're the people that go crazy because you don't have the capacity or ability to be mindful, which again goes back to real time. You let your emotion drive decision. There's no emotion here. The chart says buy it or don't buy it. Your plan says this is my target. Done. Where's the emotion in that? There isn't any. The chart, they're just red and green candlesticks. They represent the emotions of others. But once you make the decision to buy, it's called autopilot. The target's here, the stop is here. Next. Let me start scanning for the next trade. Okay? So emotions are triggered when there is a disruption of a familiar or established pattern. This often leads to stress, which leads to fear, which leads to bad decision making, which leads to improper trading, which leads to lost money. Gosh, isn't that Pandora's box? One domino takes all the dominoes, and that's what happens. It's a disruption of a familiar or established pattern. So the question then becomes, how do we break the disruption? How do we step away, become mindful? Becoming mindful is to say, I'm going to step out of myself and look at myself and go, what is my current self thinking right now? Because as you step out of your body, you're going, I'm objective, but that person is not. So I need to insert some mindfulness into this person. I need to insert some logic into this person. Take their emotion away. Be emotionless. Be robotic. We've done a lecture on robotic indifference. Doesn't matter. It works. Doesn't work. Right? What was that line from the second Wall Street? I can't remember it. Somebody will tell it to me. Some days I win. Some days I lose. Every day I'm okay. That's the way you need to take trading. Some days you win. Some days you lose. Every day I'm okay. Because you believe in your edge. Now, when you're new, you're not going to have a great edge because you don't understand your trading plan well enough. You don't understand yourself well enough. You don't understand the charts well enough. So when you're brand new, your edge is going to be, you might have a negative edge when you're new, honestly. You might follow your plan and still lose because you have a negative edge. But once you get better, that edge becomes a positive edge. Okay? So we create our understanding of our world from our adaptations to our deepest fears and desires. Interesting, isn't it? Right? So, develop mindfulness as a tool to maximize our thoughts in the middle of a trade, before we take a trade, and after we've exited. Otherwise, we lose objective perspective and begin the fear-based process all over again, which is this emotional process right here. Okay? Which ensures the same thing will happen again. So, I'm going to continue to peel back the onion. Everything we do has a cause and effect, right? You must determine why you do what you do. Why do you sell so soon? Why, when you see that wide range green bar, do you just drop everything and spill all your coffee all over yourself? I got to get out. Why does this happen to you? Well, one of the reasons we just talked about is your fear of loss is too strong. But why? Why is your fear of loss so strong? Well, most people, that comes back to the need to be right. The need to be right is the single biggest detriment to basically all humans on the planet. We all do this. We're all guilty of it. Okay? Even people who lack confidence are guilty of the need to be right. We all want to be right. Ever have an argument where you know deep inside you're like, man, I'm not really in a good spot here in this argument, but I'm going to die with the lie, baby. I'm going to just defend my side of the story till the bitter end because saying I was wrong and you were right is too painful. The need to be right. It's pure ego. It's just too painful to say I'm sorry. It's just too painful to say you were right. If you cannot admit that you were wrong, you will never be a good trader because you won't be able to correct it the next time around. You'll make that same mistake because your ego is trading for you, right? Top Gun, your ego's writing checks that your trading account can't cash. So if you sell too soon, is it because you're scared to give back profits? Ego. If you're scared to give back profits, is it because you need the money too much? Maybe you don't have a backup income. You're trading with scared money. Ever heard the phrase, scared money don't make no money? That's where it comes from. If you need the money, how can you overcome this issue? Maybe get a part-time job, cut back on living expenses, sell something. My point I'm making is you need to look at the causal, right? The cause and effect and go, what is the root cause of this? So that's number one, right? Determining what the issue is. And then the next part is why? Why do I do what I do? Maybe it's a simple fix, right? Get a part-time job. Now you're less stressed about needing the money. Maybe it's deeper than that. And this is where I tell people build that consequence system. If you have a severe, significant consequence system, hopefully the pain will be so great that you won't make some of these decisions or mistakes, okay? So this is a process you have to go through to determine what the cause and effect in your trading business is, right? It's not going to happen overnight. We are not robots. You don't flip a light switch. This is a process, and it's a hard process. You work at this process. You work at it every day of your life. And again, I know I use this analogy way too much, but it's the alcohol analogy. Even if you've not taken a drink for 10 years, you still call yourself a recovering alcoholic. Yes? You're basically recovering for the rest of your life because you always have to watch yourself. Yes, you get better, right? When you first quit the habit, you probably can't be around people that drink. You can't go to a bar. It's hard to go to weddings. 10 years later, you can be around drunk people and not feel the need to drink, but you're still mindful of the fact that you are susceptible to that emotion. This is what traders need to do. In the beginning, you can't be around your trade. You're going to have to set that bracket and walk away. 2 years, 3 years, 4 years later, you can sit there and stare at it. And just like this, you'll just stare. And you won't even feel one inkling of the need to get out of that trade because you're like, it's not a target yet. It's just cut and dry. Is it a target? No. Okay. Not doing anything about it. I'm just going to sit here, twiddle my thumbs. The first couple months in trading, you're like, 20 more cents, 17 more cents, 12 more cents. Oh my gosh, it's 6 more cents. Come on. Now, what if I just took it at 6 more cents? It's close. I mean, I could justify it, right? Because the market that's got that little, like it's got that red bar on the 5-second tick chart. It's probably going to pull back. And I mean, 6 cents is like 90% of my target. And I mean, it's close, right? You're sitting here trying to talk yourself into getting out of a good trade. What? That's a problem. So if you're not aware of that problem, 1, you need to be, right? 2, if you are aware of it, what steps are you going to put into place to make sure you don't do that anymore? What are you going to write down on paper to say, I understand I have a problem when I get to 90% of target? How can I help myself reach that target? An example, maybe you say, I really want to do 2R targets. But my gosh, when it gets to 80% of my targets, I just find myself jittery. So you might say, okay, well, I'll set a bracket and walk away. Well, some people say, well, I want to continue to trade. That's really hard for me. Okay. You might say, once you get to 80% of your target, start a 5-minute bar by bar. This will allow you to protect some. You might say, when I get to 80% of target, I'm allowed to sell 1/4 of my position. There's something about Mary's approach. I don't need to explain it if you know what I mean. You know the scene. It's early in the movie. Wink, wink. What? Something you can do to help yourself get to the bigger goal. Okay? And sometimes, guys, it's going to be painful, right? We don't want to hear negative things about ourselves, especially from ourselves or people that we love, right? So you're going to have to be able to swallow some tough pills, right? And a lot of times, most people aren't willing to do that, okay? So ask yourself these questions. For you. They're not for me. They're just for you. Are you willing to lose money on this trade? If the answer is no, then just don't take it, okay? Learn properly from the start. Why? It's much harder to fix bad, deep ingrained habits later on, right? If you you will win only if you aren't afraid to lose, right? We talked about that. Your fear of loss has to be stronger than your hope for gain, okay? Trading's a pretty simple business, right? When you think about it, it's not an easy business, it's a simple business. Having the knowledge to know when the odds are in your favor, the patience to wait for that moment, and then the discipline to handle the trade properly when it goes in your favor and properly even if it goes against you. That's it. It's like those little coins. God grant me the ability to control the things I can't control. Whatever. You know it. I'm botching it up. You get the point. Maybe carry one of those around with that phrase on it, and just read it. Maybe put a stress bag on your desk. Do something. Your job, it's to identify your edge. That's the pattern most of the time. Your edge is the pattern. Then assess the risk to reward. Does that pattern have a good enough risk to reward? And then monitor your emotions. That's all your job is. Identify your edge, assess the risk to reward, enter the trade, and then monitor your emotions. Like monitor your heartbeat when you're at the gym. It's getting a little too high. What do I need to do? I need to slow down. Turn the treadmill from 9, turn it down to 6.5 or 7. Heartbeat's over 210. Got to lower it. Right? But mindfulness is what matters to do that, okay? Succeeding in the stock market means controlling natural impulses and reversing unwanted emotions, okay? i.e., don't fear losses, rather hope for gain. Wins and losses are part of trading, right? So just know you have to lose to win. If you can't accept the loss, this isn't your business. You see, guys, most businesses you go, okay, and you get a paycheck. You show up, do a good job, do a bad job, whatever, you're going to get paid on Friday. Sales jobs, Well, it's 50-50. You show up, you do a good job, you get paid on Friday. You show up, do a crappy job, no one buys anything, you don't make any money. So job A, you make money. Job B, you can make money, you cannot make money. Job C, which is trading, you can make money if you do your job well. You cannot make money if you don't do your job well and you break even, or you have that third option where you can lose money. And that's the part that bothers people. But that's what makes this business so unique, and that's why the upside potential is nearly limitless. All those people that are getting a paycheck on Friday, they're sitting there making Excel spreadsheets all day. They're doing a service for someone, and they get paid directly for that service. I poured you a glass of soda. Here's your tip, right? My point is there's not huge upside to that. That's why there's so much upside to trading. Because there is the possibility of loss, okay? So you want to understand that if you can't accept the loss or losing, then trading's probably not for you, okay? Good trades, guys, most of the time, they jump out at you. You know what's a really good trade, okay? You know what's a crappy trade, but your emotions lead you to take bad trades sometimes. Don't overcomplicate this. This is, again, where the mindfulness comes in, right? If you don't have mindfulness, you can't stop yourself from taking a bad trade, right? It's true. If you don't know what you're feeling in the moment you're feeling it, you can't stop or change or overcome that emotion. Okay, so the discipline is going to be the key, but the problem is you're not just going to have discipline, you're going to need consequences to have discipline. It's true. Everything in life is this way. You don't do 261 miles an hour on the highway unless you're on the Autobahn because you don't want to go to jail, right? So there's the consequences, what keeps society in check. We like to think that we're really good people, we're all good human beings. But rules and regulations and consequences for breaking those rules and regulations are really the only reason that society works the way it does. We have guidelines. If you don't follow them, there's a consequence to that guideline. And the consequence is usually something that is not fun or it's painful. You need the same thing. Trading is 99% waiting for entries and targets and 1% actual activity. Think about that for a second. Trading is 99% waiting for entries and targets and 1% activity. The 99% should be spent scanning and looking for opportunities. So, let's take a look at a few charts here, if I still have your attention. All right? This is a trade that was taken last week. Okay? Break-even trade, but 3R all or nothing made 3R. So I'm risking $1,000 on this trade. That basically means my goal, my target was to make $3,000 on it, okay? So this stock, not the most perfect pattern in the world, but it was an okay pattern, right? 1760 entry, 1740 stop loss, okay? So I had 5,000 shares of this thing. It moved up and it went to like, I don't know, 1795. So it went like 35 cents. It went almost 2 to 1, okay? 1.75. So it was up about $1,700, pulls back, and it stops me at break even. Why? Because I raise my stop loss to break even. Okay? Bounces, pulls back even further. Bounces, pulls back even further. And then what? Rips. Even if I took the 84% play on this, what would have happened the second time? It would have stopped me at break even both times, right? It's a 20-cent stop loss, so 1780 is 1R, and I go to break even at 1R. Well, guess what? If you got back in it at 1760, it went to 1780 again, and pulled back below break even again, and then it went 3R. So, someone doing 3R all or nothing made $3,000 on this trade. I made zero, and I lost $25, right? Someone else made $3,000. What's the point of this slide? Why am I even showing this? Because that is my management. All or nothing is not my management. But some of you will look at this chart and this trade and go, well, moving to break even after 1R move is stupid. Look, Jared, you lost $25. You could have made $3,000. Duh. Well, that's a very short-sighted approach on trading, right? That's an overly emotional comment without having the empirical data to justify it. Yes? Remember what we talked about earlier. Casinos don't make money in blackjack on 5 or 10 hands. Their edge really exists on 5,000 hands, 50,000 hands, 5 million hands of blackjack. Now, I am not suggesting that all or nothing is bad. It's not the suggestion at all. The suggestion here, or the commentary here, is don't change something. Don't get overly emotional about one thing. Remember, your edge lies over hundreds of trades, thousands of trades, not one trade, right? That's where your edge lies. So here's an example. Same management, now what? Well, you get in right here at 98.06. That's the entry. Stop 97.67. Moves up. Pop 58 cents, which is 1.48 R, about 1.5 R then. Break even got me last time. And that bottoming tail looks like a bounce, so I'm holding this time. Right? Last time I would have made $3,000. And I lost 25 bucks. Well, this time, I'll be damned if I'm going to let the same thing happen to me again, because look what happened last time. Pivoted, bounced, retested, and then just ripped higher. Look, little retest right there. So what looks like it's about to happen? My goodness, you got a little bit of support over there. This bottoming tail, it barely held the original stop down there, but this bottoming tail looks higher. You know what? I'm not going to take it right here. I'm not going to get out of break even. I'm just going to hold this thing. And then that happens. And now what happens to you? The market's got you by the short hairs. The market's got you tongue-tied and twisted. So now you got a double whammy on your hands. You broke even on the first trade, and you thought you should have made $3K. The second trade, you broke your plan, and you should have been break even, and you lost $1,000. So now you're $1,000 behind your plan because you knew what happened on the last trade was going to happen on this trade. Trust the process. Trust the reasoning behind why you're moving your stop loss to break even in the first place. Either potentially it's an emotional crutch that you need, or it's more profitable. For me, it happens to be more profitable to raise my stop to break even. But that doesn't mean more profitable on every single trade I take. It doesn't mean that at all. Facebook today, we got in at 225, stop was 223. Facebook went 1.3R, it was up $1,300. What's Facebook do? Comes all the way back to break even, stops me for a small gain. Facebook's back up $1,000 right now. I'm not in it because my plan said move to break even at 1R. And sometimes you're the pigeon, and sometimes you're the statue. But in the big picture, the goal is to make money. It's not over one trade or two trades or 1 week or 1 month. I see far too many of you changing your plan all over 1 month of trading or 2 months of trading. A plan that's largely worked for you for a very long time, and now you're like, well, gosh, this other management kills it. So when you're going to backtest, when you're going to change something significant, make sure you have a large enough sample size, 3, 6, 9 months of data before you do that. And on top of all of that, don't let your emotions play games with you. 2 trades in a row, you stopped out at break even. Oh, well. It's better than minus $2,000. Sure. On the last trade, you would have made some money on it if you did all or nothing. On this trade, you would have lost some money. You need to sort out which one's better for your psyche and your P&L, both. It's not either or here. And please pay attention. Listen to this one more time. When you decide on a management strategy, you need to find out what's best for both your psyche and your P&L. What's only best for your psyche isn't allowing you to push yourself to be better. What's only best for your P&L doesn't take into consideration what your psyche says. I can't do 7R all or nothing. Well, then we're not going to do it. But if you only look at one or the other, it's like looking at your batting average without looking at your win-loss ratio. Well, somebody emailed me the other day, like, well, what's your batting average, Jared? I said, my batting average is irrelevant. I said, now here's a question. I said, would you rather have an 80% batting average where you win $100 on your winners, or would you rather have a 40% batting average where you make $1,000 on your winners? Oh, I'd rather have the 40%. Why? I make more money. Well, then why'd you ask what my batting average was? It doesn't matter. It only matters in context. Right, Mr. Biden and Mr. Rogan? It only matters in context, but it only matters in context for one of you, not the other one of you. Point? Everything's in context. Has to be. Your psychology matters because you're the one trading. So you know yourself. This goes back to the mindfulness, back to being honest with yourself. If you're not honest with yourself, you're going to choose a management strategy that you have no business even trying because your psychology is not there yet. Right? It's not there yet. You don't put an 8-year-old kid who races go-karts into a Formula One car. There's quite a few steps in between, isn't there? You're not ready. So they go hand in hand. Okay? Your plan's always right. What are we doing here? Back to making 3R. Get into 42.22, stops 41.38, boom, goes 3R. The plan's right. So if you took those 3 trades, the first 2 were break even, the last one made 3R. That's your plan. Maybe 3R all or nothing on those 3 trades would have done better. Maybe 3R all or nothing on those 3 trades would have done worse. Doesn't matter. That's your plan. That's your plan. Right? Guys, your plan can be frustrating. Your plan can be immensely frustrating. Look at this. How annoying was this week? It's actually last week, but you get the point. OMG. Okay? This one should be gone right there because that was the previous week, that 21st. So you can ignore that and just focus on the 24th, right? Look at this end to the month. 1, 2, 3, 4, 5, 6, 7, 8 losers in a row. Jared, you suck. You're a terrible trader, Jared. You're sitting there, geez, you're down 7R on those 8 trades. One was pretty much break even. You're down 7R. Oh, tiny little winner. Now you're down 8R. Tiny little winner. Now you're down 9. And all of a sudden, boom, 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 boom. 3 trades gets it all back. Now, was this a great stretch? No, it's a horrible stretch. But look what happened. It went half of an R, stopped full. Went 0.3R, stopped full. Popped 5 cents, stopped full. Went 0.86R, stopped full. Went 1.1R, stopped full. Went stopped full. Look at these. 0.92, 0.85, 0.83, 0.99. How frustrating is this when your plan goes to break even at 1R? There's a break even trade. This one just barely missed break even. 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 Oh, and this one's even better. Gave 50-cent slippage on the stop out. 0.9R stopped out. Guys, guess what? That's just called trading. That's just trading. So this was not a good stretch. It was a terrible stretch. Okay? But it only took 3 trades for me to get all of it back. So during that, that's what? 7.7R plus 2 is 9.7R plus this. So that's about 10.3R. And it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Something like that, right? Minus 10, plus 10. That's a terrible stretch to be break even on 1, 2, 3, 4, 5, 6, 7 trading days. After 7 trading days, I was break even. You know how annoying that is? Why am I showing you this? Because this, specifically this right here, this is when you start to do what? Talk to me. 7, 8 trades in a row you've lost. What do you start to do at that point, guys? Yes. Nick has it. Doubt begins to creep in. And doubt causes your emotions to go a little haywire. And once that doubt gets big enough, you start exactly breaking your trading plan, bridge shopping. Think about changing your plan, breaking your plan, all of those things. You sit there and like, you've got to freaking kid me. And then what do? You're like, hey, you know what? Based off this, I'm going to move my stop to break even after the stock pops 0.5R. Why? I'll tell you why. Because these stats clearly show I would have done better. Look. 0.5R, I could have gone to break even. All right, I just saved 1,000. Oh, look at this. 0.8R, go to break even. Save 2,000. I already saved some there. Oh, 0.9, go to break even at 0.5. Save 3,000, save 4,000, save 5,000, save 6,000, save $7,000. Duh. Why didn't I think of that before? Now I'm going to change and I'm going to move my stop to break even at 0.5R. Every time a trade goes half of an R, I go break even. Oh my gosh, it's one of the dumbest things you could do. This is just a statistical anomaly. And look how close they got to 1R. Shit happens is what we call it. But thankfully, it didn't take much to get it back. It only took 3 good trades to get back, 10 or 11 losing trades. Wonderful. But that sucked. Ending January this way was really annoying. You know why? Because January started off really good. Right? Started off 10, 12, 15R in the first 2 weeks, and it ended the last week and a half like crap. This is what happens to people. Right? You know how annoying that is? I did this, guys, just so you could see it more clearly. It's the same sheet. I just did it so you could see it more clearly. All right? I'll go back, show you. It's the same sheet right there. I just cut it so you could see it in bigger text. Okay? You know how annoying it is to lose 6, 7, 8 trades in a row, especially when they're so close to going break even. So close to going break even. Some of these are literally pennies away from moving my stop to break even. You know how annoying it is when a stock goes 1R, 1.1, goes below break even, and then hits target? Guess what? That is part of the trading plan that you chose. And you chose it because 2 things. You chose it because mentally you could do it, and it makes money. So you're going to have some of this. You've heard the term reversion to the mean. You make 10R in 3 days, the market's coming for you because that's not normal, right? You might normally make 3 or 4 or 5R in 3 days, but you don't normally make 10R in 3 days. So now you're probably going to have a little pullback. The next 3 days, you might lose 3 or 4R. And all of a sudden, at the end of the week, you've made 5, 6, 7R. Good week, but not 10R in 2 days or 3 days. Okay? Follow your plan. You guys saw this a while ago. Follow your plan. Good things happen. Follow your plan. Good things happen. Right? But even Unmol has reversion to the mean. Oh, and one last comment before we wrap this up here. If you really think tying in to our last lecture, if you really think it's that hard to break your plan, think about this. You know what this is? This is not an internet picture. When I did that lecture on attitude of gratitude, I got lots of emails from people. Lots of them. Someone went on, I think it was a mission trip, okay? And they sent these pictures to me. They sent about 10 of these pictures to me. Does what you live in resemble this? People going to the bathroom outside, around their shack that they live in, dumpster diving. They live in these places. So I'm going to ask you again one more time. Is following your plan, is it that hard? Is it as hard as what you see on this screen? That hopefully will give you a little bit of perspective. Lots of people live this way. When I mean lots, I do mean billions of people live this way. On your worst day, you don't live like this. On your worst day, you don't live like this. So ask yourself, is following my plan that hard? Maybe put a picture of it and ask yourself, is following my plan that hard? Okay? I wanted to put this up here because I got this in an email. Somebody sent me about 10, 12 pictures. I got lots of emails, okay, from folks in other parts of the world. Some people had visited, other people live there and say, thank you for doing that lecture, etc. Every time you think it's that hard, look at this. And one of the comments this person made to me is, yet, despite the conditions, most of the people seemed pretty happy. They seemed happy. And we get upset and yell when our latte isn't done in 32 seconds. Perspective. Okay? So, we'll wrap it up with this last slide. You can't go broke taking profits. You actually can go broke, and it's actually how many people go broke, is taking profits too soon. Affecting real change happens quickly. No, it's going to take you some time. You're going to have to put together a consequence system. You're going to have to get a trading buddy or a trading partner. Okay? You're going to have to really put yourself up against being honest with yourself, if that makes sense. Like, really, you're going to have to say, look, if I want this to work, I really need to take this not just seriously, but honestly. There's a difference. You can take something serious and still lie to yourself. But you really need to be devastatingly honest with yourself. Have someone else bounce ideas off of it. Tell them what your approach is and say, if I do this, make sure you hold me to my consequence system, okay? Profitable trading is only for the lucky. It's not. It's for the disciplined people that have some skill as well. Copy your way to success? No, you're still going to have to put the time in. It can help you accelerate your success, but you're still going to put the time in. Success won't come quickly. It really won't. It's going to take you years to get good at this, but it's worth it. It takes you years to get good at anything. Why should this be different? I always love when people are like, well, yeah, what do you mean by years? And I said, 2, 3, 4 years. Really? Uh-huh. What else are you good at in life that you did in less than 2 or 3 years? I mean, really good at. Like, good enough that someone would pay you for. Not much. You went to 4 years of college and you paid them for that before someone was willing to pay you for this. But that's okay. But this isn't. It's weird, right? Past success, there's no real advantage in any other job you've done. There may be here or there, but generally speaking, it doesn't matter where you come from, which is good. CEO, Fortune 500, or ditch digger, homeless person. Doesn't much matter, right? Management that makes the most money is not always the best. It has to be the combination of psychology and money, okay? So, trading, guys, great equalizer. You've seen this slide before. A high school dropout or a Fortune 500 CEO. Market doesn't care. We're all the same. Your ego, experience doesn't give you an advantage. So, I hope that you guys learned a little bit about psychology today and how important it is to be brutally objective and honest with yourself. This doesn't mean, see, this is one last comment on this before I end this. Many of you are hoping that there would be one word or one line that I said that literally would be like the light bulb moment that tomorrow makes you a great trader. There is no such thing. It does not exist. It's piling on information to finally getting to a point where it all comes together. I want to repeat it because it's important. Many of you are hoping, oh, sweet psychology. Jared's going to say something today that will make me a great trader tomorrow. It might make you a better trader tomorrow, but it won't take you from a bad trader to a great trader tomorrow. It's going to take you time. You're going to have to really work on these things. And you shouldn't expect anything less, right? Trading's a wonderful business. You can do it from anywhere in the world. Well, you're gonna work for that opportunity, right? If you want something easy, I don't know, go work for a company in a cubicle and type stuff into Excel sheets. You'll get a guaranteed paycheck, but then you'll also be under the thumb of the boss and he'll tell you when, or she'll tell you when to come and go. If you don't want that, then you're going to have to put that time and effort in. It might take you longer than you expect, but the reward will be bigger than you expect. And many people have learned that the last 2 years, right, with the pandemic. Wow, I really like working from home. I really like seeing my kids more often. I really like that flexibility. If you like that, you'll love trading because it provides all that and then some. So I hope you guys learned a little bit about psychology, hopefully a couple tips and points on how you can be better at it. I'm Jared Wesley of Live Traders. We'll get back at it again next week.